Hello guys, welcome to this weekly session with me, Pierre from PAFX. I hope you all had a great trading week last week. We really did have a great week, me and the students and everyone else in our room. As you saw after the weekly analysis we had on YouTube, many of the forecast went our way and it was a great trading week. So I hope many of you that saw the session could make some pips, some money, and had a good trading week. Before we get started, I will just say something for all of you who are asking about the course. Yes, I do still have seats left, so it's really time to decide if you want to join, because the next batch of students will start the first week of November, so there's 2 weeks left, and you maybe have 1 week to make your mind and take a decision. So yeah, hit me a message and we will get you organized if you are interested. Okay, as always, we will start with the disclaimer that I really want you to read carefully and know about the risk involving in trading, and that in this session I will only show you the way I see the market, and it's not a signal in any way. So welcome everyone. It's very hard to me to call out every one of you. We have already about 25 viewers in the room, so welcome in this weekly session, and I hope you guys will enjoy it, and if you do, please hit the like button. I really appreciate it to see many likes on the videos. That will keep me doing this every single week. We will start with the usual. We'll start with the Dixie, and I'm on the weekly time frame. And since we've been following the Dixie, you see guys that on the weekly we're still in basically we're still in a downtrend on the in the weekly. But the last months we had 4 weeks in a row to the upside, and the Dixie did reach the level that I was talking about up here around the 94.50 area, where I said that we may see some correction down at that level, and we really got that. On the daily here we can see that we did reach previous structure resistance, and we reached the monthly R1 at that same level, which make it a powerful resistant level, and we got a very nice rejection to the downside last week. In the Thursday it was an inside day, bullish inside day, and Friday we got we ended the week with a doji on the Dixie. I think there is more to it, at least to retest the neckline down here. We're still trading, as you see below, the 100 and the 200 moving average. We did cross above the 20 for a while and did a retest, and the 50. So we still have some room to reach the monthly pivot and the neckline that I think the Dixie may test for next week, or probably lower. Looking on the 4 hour, you see that the 4 hour time frame trend is also to the downside now after the break of this counter trend line here. We saw that the Dixie did break this counter trend line and start trending lower. To me it looks like we have some kind of bearish flag. If we look at it like this, it seems like a possible bearish flag, and this could be just a correction higher after this impulse to the downside. And Friday was a bit messy. as you see, this 4-hour candle, stop loss hunt on both sides, and yeah, I'm still looking for a little bit more down, maybe around the monthly pivot down here, where we do have this previous neckline to test this broken area. And if we do break this area down here around the monthly pivot, we may test even lower toward 92 area down here at this structure support. With that in mind, we will take a look on gold later. There is one more possibility that we may see a bounce from this previous structure support looking left. I mean this structure here, that we may see a little bit of a bounce back to give us another retest of these highs. And if we really got that and another failure to break above here, that would be the real good signal that the Dixie gonna go much lower until we have a break of this previous structure high. Both highs here got broken. I will try to still looking at this as a bearish possibility, but if we break this neckline, that will complete the scenario we've been talking about for a while, and that is this possible head and shoulders scenario may be completed. Once again, for this head and shoulder to be confirmed, we want to see a break of the neckline up here in this area for a possible continuation higher. But looking at the rejection last week, I think there is more room to the downside. Even on the RSI, we still see that we have some more room to the downside on the dollar. So gold also did exactly what we were talking about last week in the weekly session, that after reaching this kill zone down here around the 61.8 Fibonacci retracement of this move here, I said that we do have previous structure support, and that we do have the 61.8 Fibonacci retracement, and that we had the 100 daily moving average and the 200 coming from below, that we may see a bounce from here. And we had a great bounce. The whole week last week was bullish days on gold, and Friday was a real good break above the 1300 area, which is a very good resistant level. Looking left here, you see that this area, it has been acting as very good resistant in the past. Here and here, another test here, and we have some reaction here, and now that level got broken. So we maybe are looking at continuation of the major long-term trend. If we go to the weekly, you're gonna see that more clear. As you see on the weekly, we still have we're still making higher highs and higher lows. This was our major high here, and we can see this as a higher low, higher than this structure down here, yeah. And the weekly candle was a strong bullish engulfing candle. We have morning star formation with these 3 weeks here, and it's looking very strong to the upside from looking at the last week candle. So there is possibility that we may see gold keep heading higher from here, but now we are at the monthly pivot point, and there is maybe a possibility for some correction down next week before keep heading higher. And we should be looking to buy the dips on gold, depends on how far down it may go. So on the 4 hour you can see it clearly how nicely rounded bottom we have here. The signal was very, very strong and clear when we dipped in this area I was talking about. We got a bullish engulfing on the 4 hour and start making breaking new highs and making higher highs and higher lows. And this is the major candle now that broke the 1300 area. As you see, the level is an important level, looking at how big the candle was that broke this level. Yeah. So for next week we probably want to look for a possible buying opportunity if we see the gold giving us a pullback back down toward 1295 area down here, to try to if you're not long already, to try to join this move to the upside. Even better if we get a little bit deeper correction, but looking at the momentum we have right now, I'm having hard time to see that we may get such a deep correction. Yeah. So any pullbacks or possible flags on lower time frame, the 1 hour or so, that could give us another bounce back down to retest of this area down here. That would be a good level to start with for next week for a possible target around the monthly R1 and the yearly R1 back up here at the highs up here. Yeah. Oil, I'm still bullish for now. I think we may see oil start going much lower, but that gonna need much more time to happen. So as for now, we keep making higher highs and higher lows, and this trend is still valid. We're still trading above the 200 moving average, and as I said last week, I am bullish on oil, and we had a great move here on this particular day, which gave us morning star formation, broke above the monthly pivot point, retested, and Friday was a bullish engulfing. So there is a possibility that we may see oil keep heading higher to at least retest at the to the previous highs here. And of course the major target would be the monthly R1 back at the extremes highs up here around the 54 area. On the 4 hour, if you're not in oil, as you see, we had this inverted head and shoulder formation here. The neckline is broken now. We got a couple of candles that retested back down here and got rejected. So where the oil is right now is a good level to start looking at for a possible continuation higher. And if you get back down to the monthly pivot point, that would be even better, but you don't want to see this right shoulder broken, because that would mean that we may see something like this and back down to retest of the head or even lower. Okay. So yeah, I'm still long on oil. Forex, Aussie JPY. I also talked about how important this level was last week in this session also. We're still trading above the 100 and 200 daily moving average. If we look at the weekly, we have a nice piercing pattern completed last week at previous structure support. On the daily, you see that we did dip back in this important level, and I said that we should be looking how the price will react at this level and look for bullish evidence. So I hope that you guys did profit from the trade from this area, and we had a great bounce toward the monthly pivot point. I think that there is more room for this pair to give us a higher bounce, and if we go to the 4 hour, we see how nicely rounded bottom we had here, and we reached the monthly pivot area and got some rejection. This last candle on Friday could be position closing and profit taking, and that's why we probably got the rejection, a bearish candle. If you are in a long already, I think you can at least look for these highs up here, and if that got broken, then the next level would be around the 93,300 area up here. If you are not in this trade, you probably want to go lower to 1 hour and start looking for possible correction lower, a retest of this previous structure down here. That would be good. Or if we take any Fibonacci retracement level to work with, so somewhere in this area where we have the 61.8, that would be good also. That is also the same level where we have this the neckline. And if we take a measurement from the extreme low to the extreme high of this move, you see that we do have confluence of a cluster of Fibonacci levels at this same area down here. Yeah, it is more clear what I mean here. In this structure here, that would be a good level to look for possible another bounce for a retest of these highs and maybe a breakout. Aussie USD, almost the same as Aussie JPY. It did reach a previous structure support, an important one, and that one also we were talking about last week. The same scenario, we have previous structure support and the 100 daily moving average coming from below. We had the earlier week already a test and a rejection, and we were looking for another dip lower to go long. It didn't really test the extremes lows, but we had some correction lower, and the signal were there already. Bullish engulfing on the 4 hour, 2 candles here. Another more signal for you was the break of previous highs here, and another retest of this broken structure and the continuation. So it was a great reversal trade here at this level, and I think that we may keep looking for more long on this one. Extreme target would be the monthly R1 up here. If you are long already, you probably should keep holding this and have your extreme target around the monthly R1. On the 4 hour right now, as you see, we did break previous structure resistant. The neckline of this is now broken, and what we want to look at for next week is if we get some correction lower to retest of this structure, or another bounce to this area down here. That would be great to give us a trading opportunity from these lows down here if you are not already in a long. Yeah, and if we go back to the daily, you see that we now broke previous high here even on the daily. So that's why I am really looking for another pullback. That would be great, and continuation higher. Oops, like this. That would give us an inverted head and shoulder at support. That would be a very good signal, And as I said, once again, as far as we are trading above the 100 and the 200 moving average, I will on the daily, I always keep looking for a continuation long. Euro Aussie, let's go to the weekly. You see that this extreme high here was tested now 3 times, 1 time here and last week another time. At that same level we had the monthly R1 pivot. We had a fake out and a great move to the downside. 2 days took out almost a whole week trading. It is a very good sign that the bears are in total control here Thursday and Friday last week, and I'm looking for possible continuation lower now on this pair. We are still above the 100 moving average, which, as I said before, could be our go long signal, but really looking at these last 2 days, they looks very strong. It's showing us that the bears was clearly in control, and I'm not going to go long on this one until I have a clear signals. But my first thought right now is we have a triple top. Looking at the weekly, another try here gave us triple top. We couldn't break this level, and that's why even though we are above the 100 and the 200, at first I am looking for a possible break of the trend line and possible break of the moving average also soon, next week maybe. You see the move is very strong to the downside, and it is very late to enter if you're not already in the trade. So what we want to look at is a correction higher for next week, maybe towards these structures down back up here. You see we have some reaction here, and we have these previous structures resistant that we may work with. So this level up here, that would be the area to probably look at if we get a correction higher, to try to take a short if you are not already in that position. Yeah, if you are already holding a short, you want to see a break of this low down here on the 4 hour. This low, you want to see it broken, and if that happens, then I think we are going to test the extreme lows back down here on this pair. Okay. Euro JPY, we go to the weekly on this one too, to see where we are at. As you see, the up move is now reached some previous structure resistant up here. We also almost reached monthly R1 at this level too, and we got some couple of weeks of bearish weeks, and last week it was a try to move higher that got rejected back down again. Thursday and Friday. Thursday was a bearish engulfing, almost a bearish engulfing or a dark cloud cover, and Friday was a confirmation of the pattern with another bearish day. Now we are back at support, and this is the area we should be looking at early next week to see if we're gonna get a bounce here down from previous structure support. As you see, we had many tests at this level down here, and here another time. and looking left, you see it was also acting as resistant back here. So it is an important level to look at. We have the 200 moving average on the 4-hour time frame also at this area. So at first we maybe want to look for a possible short-term bounce from this level here. And if you look at the RSI on the 4-hour, you see that we are also reaching the oversold area on the RSI. On the daily, we still have much room to the downside, but we've been trading in the middle, around the middle of the RSI for a while now. And this level now is very important level, because if that got broken, we may see at least a retest of the monthly S1, or probably lower until the daily moving averages reach the price. So once again, early next week, look at this area for a possible short-term bounce higher from this important structure. If broken, then of course we want to be looking for a retest on lower time frame and continuation lower to probably the monthly S1 area down here. Hello Huzaifa, welcome. Euro sterling, as you know guys, from last week I was looking for this reversal to happen around the 61.8 area up here to try to take a trade from that level. We didn't really reach that area. The 38.2 was the level that got respected. Thursday was strong move higher above that, but got rejected all the way back down below the 38.2, and it gave us a bearish engulfing candle at that same time, and it was the first signal for a possible reversal from this level, and I think that we may see a retest of these lows back down here on this pair. So yeah, short for next week on Euro sterling, and possible target would be these previous structure low down here, where we also have the 200 moving average on the daily coming at that structure, and that would be the level where you should take profit at first. Let's look on the 4-hour if we have any structure to work with. If you're not short already, this candle here was a huge bearish engulfing, and as you see, we had the break of previous structure, retest, and went back down, and now it is sitting on this previous neckline. So for next week, you maybe want to, if you get another retest higher to this previous structure, another retest of that on the 1-hour, try to go short, and target would be previous lows down here. And here we have it on the 1-hour. You see this, the previous structure looks much better on the 1-hour. If you want to find any bearish evidence at this structure here around the monthly pivot once again, and try to short it. Euro New Zealand, the money cow of the week. It was a great trade. I did publish the idea on my Telegram channel, and I told you guys, start looking for possible reversal at this level, since we reached previous structure high and the monthly R1, and we got, of course, as many times happens in the market, when the level is very obvious, it's not new that you get possible fake out, and then, or the trader that went long on this breakout got stuck in this trade, and we got the reversal. And those of you who've been following me, you know that I look a lot on divergence to spot those possible reversals, and it was a great looking divergence. If we look at this, we had this break, retest, another fake out, and we start after that getting divergence on 4 hour, 1 hour, 15 minutes, and I did publish also the main idea and how we were reading this market about the possible triple top, and on the 15-minute this double top we had here, and another divergence looking at these levels here. It was a clear divergence on the 15 minutes. We had another move and failed to break to new highs, so all the signals were there, guys. And then it was even easier when we got the break below structure and the retest, and the trend started to the downside. Now for next week, what we are looking at is of course a possible continuation of this leg, and the first possible trouble area now to the downside would be the monthly pivot and previous structure and previous neckline area down here. As you see, we do have this neckline down here, and we do have the monthly pivot point at that level. So I think that we may see a possible bounce from this structure, at least a short-term bounce to if we got that toward the structure up here, that would be great to look for a possible shorting opportunity at this area up here. Okay. Let us take a Fibonacci retracement tool for this whole move and see if we got some confluence down there at that level. And we do actually have this skill zone down here now, the 61.8, the monthly pivot point at that level too. So yeah, for a counter trend against this trend, you maybe want to look for a possible bullish evidence at this level and try to take a long. That would be also basically a move with the major trend, which is still a bullish major trend, but I personally think that we may see another bounce lower now to probably retest these lows down here on this one. Looks like New Zealand is getting stronger, and we may see these retest lower. Euro USD did what we said that we may see for last week. All the bounce from the monthly S1, it did reach the level I was talking about, and that is the monthly pivot point and previous structure at the neckline of this head and shoulders up here. And Thursday and Friday was rejection from that level. That was not a clear signal now that we may see another bounce lower, but I think that we may see at least a retest of the neckline of this broken structure back down here, and probably we see another move higher by looking at gold and Dixie. That what I think may happen. And of course, if we do test one more time the monthly S1, of course we want to be looking for a long possibility from these lows down here. So if you are in a short on Euro USD based on previous structure resistance, based on monthly pivot point and the 200 4-hour moving average, you can hold and start looking for possible troubles at the neckline, and if that broken, then you probably gonna reach the monthly S1 once again. Okay. Aussie Sterling, After this double top here, the pair did reach back down to 38.2 Fibonacci and the monthly pivot, and we had this bounce and we couldn't make a higher high. Now we have our first lower high after this leg to the upside. So this is a clear lower high, and the move Thursday was a crazy day, as you know, guys. It was lots of up and downs, as you see here, but once again the pair couldn't make a new high even on the 4 hour. We have this clear range now to work with on that time frame. On the daily, I see a possible head and shoulder scenario here, looking like this, and the right shoulder. And of course, for this pattern to be confirmed and completed, we want to see a break of the neckline or previous lows back down here. And if that happens, of course, we may look for a possible correction and continuation back down to at least retest these necklines down here, or around the monthly S1. That would be the major target. So where the pair is right now is where you want to look at for next week, because there is a big possibility that we see another bounce up, that we keep playing this small range here for a while. So we want to watch this structure down here for a possible bounce back up. Buy the lows, sell the highs in anticipation that we may break this time and keep going lower. Okay, especially looking at how strong the Aussie USD week was last week, I can see that this may happen now. Sterling JPY, we got that bounce we was waiting for. It was a great bounce on lower time frame. You could make some pips on this move on previous structure support. Now after this exhaustion up here, we got this bearish engulfing and this correction, one lower high, another lower low, and now we have one lower low and another lower high. We can start thinking that there is a possibility now that we keep trading lower and possibly look for a break of previous structure low for another leg to the downside. That is possible on this pair. On the 4 hour, you see that the trend of this move here is still to the downside. We have the same patterns going once again here now. Impulsive correction and possible continuation lower. So if you are holding a short based on bearish engulfing on the 4 hour here, and you are already in the trade, you want to look at what will happen at these previous lows back down here. For me, I see that we have this this range now to work with, and it is more clear on the 1 hour. Let's see. As you see, this V-shaped formation usually used to mean that we get a correction and a break. That didn't happen. We couldn't break much higher here. It was still below this structure here. So we do have a smaller range to work with, and that range is of course this area here, this box, and that's what we have to work with. Try to buy if you get bullish evidence back down here, and try to sell from above and in anticipation for a break to the downside. For me, I think looking at it on the daily and the move that started since we was up here at the top, I see this as a possible correction only. retest of the structure up here, and that we may see another impulse back down. That's how I see it for now. Janice, my Telegram group, the link is in the description below this video. Just click on it and you're gonna join the group. It's for free. Why are some of your candlestick in black color? What do, yeah, those in the black color, you mean those candles, they are bearish engulfing, and those have lime color, they are bullish engulfing candles. It's just an indicator over trading view. Sterling, New Zealand, triple top at this important previous structure resistance. It getting boring talking about this structure now. We've been talking about this structure 2-3 weeks now, and it seems like a very strong resistance so far. Every time we reach that level, you almost can short it blindly, yeah. And last week the divergence was major, as you see here, looking at this high and this high compared with this high and this high up here, yeah. So we had a major divergence, previous structure resistant, evening star formation with these 3 candles. Those of you who don't know what that formation means, I have a candlestick pattern school list over at my YouTube channel. Just watch those sessions and you're gonna learn a lot about those patterns. I really highly recommend that for you to understand the language I'm talking about. So we had the evening star formation here, and now it seems like we're gonna definitely close that gap and reach back down to previous structure support down here, and we keep ranging in this area. So the plan is, of course, keep doing this, buy the lows here, sell the highs until we see a break of this box here to the downside, or a break to the upside and continuation toward the monthly R1 or previous structure resistant, or a breakdown here to toward monthly S1 or previous structure support at this neckline down here, yeah. So nothing more to do on this one until we leave this range. So no need that we get too smart. It is very clear, no need for over analyzing. The box is very clear here. Wait for your signals at these structure highs or structure lows until one of the side is broken, yeah. Sterling USD bounced up from the monthly S1 area down here. Too bad, I was waiting a little bit lower, so I couldn't join earlier, but I had a chance to take a couple of trades on the way up. Thursday was not a funny day to trade, especially for new traders, and there was a lot of Brexit talks, and as I said in my weekly session last week, be careful trading sterling pairs, because there is a lots of politics talk going on, and there will be more politics talk. So you have to be careful trading any sterling pair, because the market sentiment is moving up and down, depends on how the politics are doing and how the Brexit negotiation are going, yeah. So if you can if you cannot trade in a very low risk way, you maybe want to look for something else, yeah, especially if you're new. So what we have now is when Sterling USD reached monthly pivot point, got rejected back down, and we still at the same time have this possible V shape and fake out, as you see here. It is a clear one. In my trading book, when this such as things happen, I stop looking at this. I don't see this anymore. I just see, sorry, as if the move was only something like this, yeah, because this is got deleted. There's no value in this move. It was just down, got rejected all the way back up on the second candle. So the first thing to look at is where we are coming from. We are coming from a deep move to the downside, and it seems like from down here the bulls did really took control of this market all the way up to the monthly pivot, where it is a level that we may see some profit taking, some hedging at this level. We never broke this high and close above it. As you see, we got rejected back down and closed below previous high, which make it a little bit more tricky. I would like to see the close above this previous high to make me sure that we now may see some more upside on this one. So it is a little bit tricky actually, and it is strong move to the downside, and one can see this up move as a correction for a possible another leg down to the downside. And the best way to work with this is on lower time frame, to see next week when we do another retest of this previous structure here, this support level. If we're gonna get bullish evidence at this area, if we got bullish evidence at this level, then we may expect another bounce to retest these highs up here. If we go to a higher time frame, you see that on the weekly we did break above all previous structures and got rejected, and last week ended as bullish inside bar and another higher low. So there is a possibility also that we keep going higher, but now the move went way too long, and if you're not already in a long position, we want to wait for a deeper correction. As I said, maybe another retest back down here, that would be even better to try to go long. So a bit tricky if you're not in the trade. You want to wait for a deeper correction. On the 4 hour, of course, we are making higher highs and higher lows, but it could also be only a correction higher. Looking at the steep at the slope of the move, it is not the strongest move to the upside, but it was grinding its way all the way up, yeah. So deeper correction, bullish evidence down here, that would be a possible reason for you to try to go long. But looking at this divergence on the 4 hour, as you see, it is a strong divergence between this high and this high, and on the RSI you see how far below this high is. That's what it is, a warning for me to not to try to go long yet, to wait for a deeper correction and see what how this pair will react in lower levels down here. Not an easy trade pair right now. Wait for better levels. New Zealand CAD bounced at previous structure, didn't reach monthly S1. I really wanted it to reach down here to this level. We didn't get that. On the 4 hour you see a nice rounding bottom here, and we had divergence on the RSI looking at this low and this low here, like this, and then we got a breakout of neckline and broke another high, and the last candle was a clear rejection from previous structures. So for this pair, for me, I will be looking for a possible retest of previous structure down here, previous neckline. This level, as you see, was acting as good flip zone of resistance and support. And if we see the pair reaching this area down here, I will be looking at this level for a possible bullish evidence to try to take along once again. Yeah, that is a good level to look at, this previous neckline. New Zealand USD also gave us a great trade last week. We've been talking about this previous structure support, and the pair did reach the monthly S1. We had a gap, a couple of inverted hammers down here, sideways movement, and it was a clear level looking left here, previous structure of the neckline that should act support, and it did really do exactly what we wanted to do. On the 4 hour, we had this range to work with, as you see, and if we go down to the 1 hour, it is more clear. I'm talking about this box here. You see that we never broke below structure here. We tested it many times until it got broken and start trending higher. So consolidation period and break above structure, as you see here, and the RSI was a very good help on this one trade, because if we look at this whole period here of consolidation, we start getting divergence on the RSI, which was great, and all you had to do is keep buying the lows and position yourself for a possible breakout, and we really got that. And of course, we were looking for a take profit around structure resistance up here. So we did reach that level now, and we may expect a bounce lower, at least on lower time frame. So if we go back to the daily, you see this structure is very important one. It has been acting as support and resistance many times, and yeah, for this one we want to see a correction lower. Depends on how deep of a correction we get, and a possible bounce back up. If you're having hard time to see where to try to go long, you can use the Fibonacci retracement tool on this whole leg from the last low to the last high, and look for confluence. So the first confluence is of course the 38.2 previous structure down here. That would help you too. We had some structure here. If we go down to the 1 hour, it's gonna be more clear, and of course the best would be back down here at the 78.6 and previous neckline and previous range. Okay, 4 hour RSI is oversold, and we did reach the previous structure and 100 and 200 moving average on the 4 hour. So RSI is on the overbought, and it may need to correct a little bit lower here before you take a long. And if you get the possibility to take one more bounce to the downside, you want to see a retest of previous structure high. Maybe that would give you a double top, some divergence on the RSI up here, and then you can take a short-term trade back down to 38.2. But as you see on the 1 hour, when we go to this lower time frame, this structure looks much better on this time frame, and that's why we will be looking at the 38.2 at first to see if we can get that bounce and possible continuation higher on this pair. USD CAD, this move I was talking about it since it started, and we did reach previous structures but didn't really reach the extremes of this structure here, and we didn't really reach the monthly R1. I was expecting it to probably reach a little bit higher before we see a possible at least a correction lower. Now we did break this daily trend line and it looks like the RSI also is going lower below 50, and I think that we may see more down on this one to at least monthly pivot point, or probably even lower. But at first, to be sure on that, we want to see a break of the structure down here. Let's go back to the daily so I can make it a little bit bigger. So what I want to see is break of this level first. If that got broken, then you see it more clearly on the 4 hour now. Oops. If we break that structure, then we have something like this, retest on lower time frame probably, and I think we may reach the monthly S1 on this pair if this structure got broken. Yeah. As you see on the 4 hour, this was our last high and we start trending lower, and this low did break this previous structure low here. The retest up here couldn't make a new high, which make me start looking for a possible continuation lower. The major trend is still strong to the downside. Looking at the weekly, last week was a bearish engulfing candle at this previous structure up here, which make me also give me also more confidence that we may see another bounce lower this time. So if we look at weekly structure, it is very easy structure to look at: lower lows and lower highs, and then another major higher lower high and another break, and now we have a confirmed lower high after last week. This high is much lower than this structure high here, which make me think that we probably could see another leg down. This A, B, C, D is not completed yet, and I'm expecting a test down here very long term. USD JPY also on the weekly giving a very good candle formation, evening star formation or shooting star formation, as you see here at the 100 moving average on the weekly. Daily, nice rounded top, which usually, as I always said, when we see something like this, usually means a possible reversal, when it looks like we have right now, looking at it like this. So you have a very strong move, another push higher. We saw that the market momentum was fading. The bulls couldn't make new highs here. This shooting star formation, another try to break a new high, didn't happen. A major candle, reversal candle here, as you see, looking at the size of the candle, It was a great rejection from previous resistant level, and we start trading lower and broke this important neckline. So next trouble area is of course this structure down here. This previous structure is important to look at for a possible bounce or a break down here. So if you are holding a short, you want to start looking how the price will react at this structure here, and if that broken, then I'm almost sure that we may see a close of this gap and retest of this previous structure down here, this neckline that may got tested. So for me, looking at this rounded top here, I'm looking for more shorting possibility on USD JPY. And if you want to find an entry, if you are not already in this trade, you probably want to look for a retest up here. I think we may see, looking at the 4 hour to this previous structure, I think we may see that happen when the price reach this previous structure here, that you may see a short-term bounce up for a retest of this structure here, and then you can try to look for bearish evidence to try to go short from 1230 area in anticipation that we may broke lower for a retest and close of this gap and retest of previous structure. That's my plan for this pair. And we're back at the Dixie, which means that was the last pair for this week. Let's see, I have a question. Gold seems bearish for 1 month chart. Let's look at that. I'm not sure what you mean by gold seem bearish on 1 month chart, buddy, but what I'm looking at for now is this particular move to the upside, and that does not look bearish for me. Even on the monthly, gold is trading above the 100 and the 200 weekly. Let's go back to the monthly and see. Yeah, on the monthly, if we are talking about this possible double top, that is possible. But if you look at the bullish candles on this move here now, the bullish candles for me are much bigger than the bearish candle until we reach this top, and it looks like the 100 moving average is still acting as a good support, and we are trading above that even on the monthly. So that's what make me look for at least for a couple of weeks that we may reach this previous highs up here. Yeah. If you miss Euro USD, you can just see the recording. It is there. You can basically go back already now before we end the session, and you're gonna be able to watch it. Yeah, that was all for today, guys. Is there any questions before we end this and call it a day? I hope you liked the session, and if you really did, please hit the like button and show your support. And as usual, I will wait 1 minute to see if there is any questions or any other pairs you want me to look at. We have a bullish flag on EU. What do you mean? The MAs are the 100 and the 200 on these charts, buddy. I'm not sure, Alex, what your question is about the bullish flag on EU. Will you please explain it again? And which time frame? We have a bullish flag on EU. What do you think? Do you mean this flag here? probably. Yeah, as I said when I explained about Euro USD, I am expecting a possible more down first, test of this broken structure here of this neckline, back down here, and that I would be looking at this structure down here at first for a possible bounce and maybe continuation higher. That would give this flag a break of the bullish flag and continuation higher. So we are looking at the same thing in the two different scenarios. So yeah, you can see that as a possible flag for now, but after this double top we may see some more down first before that flag got broken. And if you try to enter somewhere in this area, if you get your bullish evidence before the flag broken, that would be better for you. And the Fibonacci confluence we have is the 50% down here at previous neckline, and the 61.8 is at this previous structure. So somewhere between these two you probably want to look for your bullish evidence, and you may enter a long if you get that before the flag got broken, because that may be a little bit late. Abdul Saeed, I did talk about oil in the start of the session, so just go back to the start of the session and you will watch that. It was like after Dixie and gold, so it's not so it is really in the beginning of the session, buddy. Okay guys, I don't see any other questions, so thanks a lot for being here, and see you out there over Telegram channels, Facebook, and my lovely students, see you in our room. Thanks for today, and have a great Sunday, all of you. Bye bye.